Good morning, good afternoon, wherever you are, gentlemen or women. So let's continue with our let's continue with the series of the Fico series. So let me quickly go to AS02. So like you are aware, AS02 is equal to check the assets. So and you can also use the parts. You can also use the part to go to the let's say which is accounting, then financial accounting, then fixed asset accounting. When you come to assets and come to change. So here you see the asset the T code. So the T code is here 02. So I'll double click on it. And then this was the asset code that we created for the last time. So I'll just put it, the system has automatically has recognized the asset code that we created. We've not created anyone. So the system is just bringing the one we've created so far. So which is this. And the company code is GY01. So I'll just go ahead and click enter on my keyboard or you click on master data or whatever. So I'll go ahead and click enter on the keyboard and then it will bring me to this environment, which is the what do you call it? The asset itself. So you can see this is the asset description, this is the determination, this is the asset codes. So you can see the system has automatically all what we need when creating an asset code is the asset class, and then the system will automatically fetch the account information to it. So let's go to the depreciation area. So as you can see, this is the depreciation area. This is the depreciation area, and this is our book depreciation. This is the depreciation key. What we've not been able to show us in the course of our series is to show you how the depreciation key is configured. We just use the particular one, then put a useful life of 5 years, and then we have acquired this asset. Remember, we did acquisition to this asset. If you look at the last video of the series number 12, if I'm correct, look at it, you'll see when we did the acquisition to the asset. Now, this ordinary depreciation starts. This date you are seeing here is gotten from the posting date we use in acquiring the assets. This date here is gotten from the date we imputed when acquiring the assets, and we use 01/01/2024 for the what for the position of the assets. Let me just show you this. This doesn't come when you are creating your asset code. We'll create another asset code in the course of this video, and then you see this item, this field is fetched automatically. You can also manually edit it. No doubt you can manually edit it, but it's not advisable to do that except you want to do some certain correction into the asset and start record. So we'll just leave this. Now we'll go to the asset value. You can click on this to go to the asset value, or you can also let me go inside this asset value and then you see what I'm talking about. Can you see? We have come to the asset master record, right? But the T code itself is AW01. AW01. That's the T code for what? For to view the asset register. Now, the assets, the value of the asset is 1,000. That's what we're talking about. The value of the asset is 1,000. And now you can see this called ordinary depreciation. The ordinary depreciation is saying 20, let's say 20. It's saying 20, meaning that what ought to be depreciated as at of today is 20. That's what this thing means. In the year 2024, what ought to be depreciated on this asset is what is 20. Remember, we said the asset should uh, should terminate in with the asset. It should take 5 years, right? We said the let me go back to the asset. You see, I took depreciation area. The useful life should be 5 years, meaning that it take 5 years for the asset to finally depreciate, right? It will take 5 years for the asset to finally depreciate. So let's go back one leg again. So this is the asset, and so this is 20. So now, if we say this asset should depreciate to finish the depreciation in 5 years, meaning that you have to spread it. You have to spread this 1,000 for 5 years. That's what it means, right? So let's go into an Excel sheet and then see, okay, before we go to the Excel sheet, let me quickly show us something. So this is the acquisition, and then let's go to posted value. Posted value tab is where you see whether the asset has been depreciated, right? You see this is planned depreciation. We have not run depreciation, and that's why this place is showing us this what do you call it? The yellow check mark that we have only planned for the depreciation because the period has actually gone. We posted this thing in January 2024, whereas today is 30th April 2025, right? So it's assuming that we have that the what do you call it? It's assuming that the period has elapsed and we are supposed to run depreciation on it. So we are supposed to plan this depreciation. That's why it's showing plan depreciation. It's showing you plan depreciation. So if you run depreciation on this asset now, it will change to posted, which is green check mark, and then you know that the asset has been run. So first of all, let's go to our Excel sheet and see and just see some basic stuff there. So this is 1,000, and we said this asset should be depreciated for what? For how many years? For 5 years. That it should take 5 years. Useful life should be 5 years, right? So what we do instead, so you can see 1 to 12. We assume this is a year. 1 to 12 is a year. This, when you see 1, 2, these are months. This is January, February, March, April. I'm sure we understand that. Let me just. So what we meant this is we said this is January, February, March, like that. That's what it meant. Okay, it's not doing what I want. Let's take this off. So hold on, I'm just trying to do something. Okay. So you can see the system has recognized. So this is December, right? That's what we meant. One. So if you look at the what you call it, you see that it's taking the position. What is being duplicated in 167, 166, right? Now 167, 166, and if you take it together for that year, it is 20. That's what it is. 20. As you can see, this is 20. 20 was what? So if you looked at it, you see that the system is also telling you that 20 is what is to be depreciated. Considering in 2024 that 20, if you go to 2025, you see, let me go to posted value and then let's see. So you can see it's only showing us 2024 because we are in 2024. So the asset here is 2024. So you see 20. This is how it was calculated. I'm sure you understand this thing. I'm sure you understand this stuff we're just on there. You understand? So this is it. So let's continue with our. So what we are trying to say here is that you can see it's 167, 166 like that for 1,000. So now let's do something so that we can get. Let's do something so that we can get our. Let's change the depreciation area to. Okay, I think I need to implement it. Okay, let me go back. Okay, so let me go back again, and then I'll just come to dictation. Yeah. So I'll change the useful life to 1 year. Let me change it to 1 year and see. Let's see. I'll save it. I'm saving it now. I'm saving it in. So I've saved it now. So I'll go inside again and then check the asset value. Now, so as you can see, so let's do something. So you can see we've been able to change the useful life to 1 year, meaning that we want this asset to be what to be depreciated within a year, right? So let's go to the asset value like we said, and then you see we have 1,000 going to the acquisition value, right? And then you have 20 to be what needs to be. So let's click on recalculate depreciation. So we are calculating depreciation so that okay, so hold on. So let's click on recalculate depreciation and nothing is yet to be recalculated. 20 is still what was net book value is 980. So the system is still picking 20 as what depreciation what's to be depreciated, right? So again, let's go to posted value and see what's ought to be depreciated. You can still see the system is still picking 1667. So something is wrong with this with the way the system is calculating this depreciation. So what we can do, what we can do is to let's check how the depreciation is calculated. Click on this, which is this one, and then you see the parameter for depreciation. You see the year 1,000 current APC. Total depreciation is 20, and the percentage is 0.2. Now, where are these? How does the system knows what ought to be depreciated here? How does the system know what ought to be depreciated? It is based on the depreciation key. that the system knows what ought to be depreciated based on the depreciation key. So I'll just carefully show you some of the setup, right? But the first thing is that let's go. So, okay, I was showing us an Excel workings on how depreciation is done. But first, let's investigate what is the depreciation key GL20. Then we'll now start explaining the other configuration with regards to the depreciation key, what needs to be done and what must to be done, right? So let's quickly go to the depreciation key GL20 and see how is this then calculating the depreciation. I'm using Control N to open a new screen. So I'll just go to the ING activity implementation guide, and I'll go to financial accounting. I'll go to assets. I'll go to asset accounting. I'll go to asset accounting. I'll go to depreciation. I'll go to valuation. Then I'll go to depreciation key, which is this. Right. Then I'll go to let me see calculation method. I'll go to calculation method. Before then, I can go to this implemented depreciation key. Like, I'll put my chart of depreciation, which is GI01. Right. So as you can see on my screen here, these are all the decision key that have been created in the system before now. These are all the decision key that have been created in the system. You can see 00, you can see DG20, you can see whatever. The one we assigned is GL20. So let's look at GL20. So this is GL20, which is building straight line 2%. If you remember, we showed us this is GL20. If you remember, we showed us the percentage, how is what they call it. Let's do it again. Display so you can see it's saying 2%, which is showing us 2%. The same thing, you can see this is 2%. The system is already showing us what it is, 2%. Now let's click on it. You select it and click on assignment or calculation method. Now, so if you understand what this thing is doing here, what this thing is saying is that uh, they assign, this is how they configure their depreciation, their what we call depreciation key. This is how they configure their depreciation key. You can see the lot of parameters that were maintained here, such as ordinary depreciation. Depreciation should start from depreciation start date. Base method is 014 and decline balance is 00. Periodic is what 010602. Then multi-level method, which is this, is 2%. I'll show you all these things one by one. Yeah, I'll show us one by one these things. So first of all, with this screen now, this is the depreciation key. So what are the prerequisites to create a depreciation key? So the major prerequisite to create the depreciation key is the base method, which is this, the base method, and the period. This is also part of it, the client balance method. And I will explain what are these stuff. I will explain briefly. I won't go deeper in it. I'll explain briefly. So and then you see periodic control and then multi-level. These are major things. Anything that has a drop down like this means that it's coming from a place or it has been set up in the system before you can select it. So these are prerequisites. These are major things that needs to be done in the system before you can create a depreciation key. Now, what are these things? What are these? Base method, decline balance, periodic control, multi-level method, right? What are they? So I'll quickly go back. I'll just go back one leg and then I'll go back again. I'll go back one leg again. I'll go back. So um, first of all, what is depreciation key? So depreciation key controls how an asset is depreciated. Depreciation key, in simple term, controls how an asset is depreciated. Now, we now have types of depreciation. We have just talked about depreciation key. We say depreciation key, just like what we assign in the asset master here. So remember, we assign what do you call it? Depreciation. We assign depreciation key in your asset master, and we have explained what is depreciation key. We said depreciation key controls how an asset is depreciated, and you have seen for yourself when we went to the asset value. You can see depreciation key is what is determining how the asset should be depreciated. And that's what we want to show us now. How are these things understand? How are these things flowing and working together? Right now, if you come to the depreciation key, you see calculation method. These are things that need to be done under it. Now we'll take them one by one. So before you even configure a depreciation key, you need to understand what is the principle or the policies around asset counting in your country. You need to understand what is the principles or the standard that you are following. If you are following IFRS, if you are following GAAP, you need to understand what is the what they call the rule in depreciating in assets or whatever assets. You need to understand the rule, the policies around asset depreciation in your country first, and based on the way your company or the business wants the asset to be depreciated. But the business will not do anything out of the principle they have adopted, which is IFRS or GAAP, as the name as it may. In Nigeria, we have adopted IFRS as our accounting principle. And in IFRS, there are standards on how assets should be counted or should be depreciated. So you need to understand that this is what will inform you on how to what to go about setting up depreciation key in the system. Like I've said, depreciation key is very important. It's a four numeric keyword that is assigned in set code or asset master that determine how or that controls how an asset is depreciated. And I've shown us the major things that are required in depreciation in the setting up of depreciation, meaning that you need to set up your base method, your period control method, and multi-level method. So I'll just go ahead and begin to explain what this thing means and what they meant. Uh, so first of them is the base method. I'll take the base method first, since it's one of the first thing that GL20, which is this. Uh, I'll just go to this. So which is base method? I'll just explain what is base method and then I would. So now, what is base method? So what is base method? I will explain what base method is. So base method is it's how do I explain this? It defines how the definition amount is calculated. Base method can also be called calculation method. That is how the depreciation is calculated, right? And we said base method defines how the depreciation amount, you understand, how the amount is calculated annually. That's what base method means, literally. Base method defines how the depreciation amount is calculated annually, right? So under this base method, you want to think of method of depreciation, right? Uh, I know some of us who are not accountants must have heard of straight line method before, straight line depreciation. We must have heard of declining balance method before, and others too, and etc. Right? So the base method in this case, like we said before now, shows how depreciation is calculated in each fiscal year, right? If your country use straight line method, which many businesses in Nigeria use straight line method anyways, many companies yes use straight line method. Straight line method is depreciated based how does straight line method work? So straight line method is depreciated evenly. Let me say it's depreciated evenly over the useful life. Meaning that what we meant, let me just use practical example here. What we meant by that is that if we have 1,000 as the asset acquisition value, and you want to, and the useful life is 1 year, yeah, the essential formula for what they call it is the acquisition value minus scrap value divided by uh, the useful life, if I'm correct. Yeah, it should be acquisition cost, which is acquisition value minus scrap value divided by the useful life. That is, let me just type it here. Let's say straight line method, yeah, straight line, straight line method, right? Is equal to is equal to um acquisition cost, acquisition cost, acquisition cost minus scrap value. That's the formula. Sorry, minus value, scrap value. Sorry, and you divide it. Just take division of it and expand this. You divide it and just say I'll use this as the division by useful life. Are we together? So what do we mean? If 1,000 is your acquisition cost minus, so let's take equal to, let's say 1,000 is our 1,000 minus scrap value. In this case, we will not use any scrap value, we just say 0, right? Divided by useful life, let's say 1. Let's say 1, right? This based on the formula, right? Based on the formula, we said it is depreciated annually based on the useful life, right? So what this thing means literally, when we say acquisition cost minus scrap value divided by the useful life, in this case, we said our useful life is just 1 year. But mind you, when we say 1 year, we are talking about 12 months. right? We're talking about 12 months because 12 months consists of a year, right? And if you do that, you will discover that the asset would have what depreciated, would have completed the would have completed its depreciation. Let me just use this as a practical example. For example, let me use as an example. Hold on. So let's take practical example. We take 1,000, right? Even this one, let's do something. Uh, let's take this and then let's say 12. So it will give you 83. So what this thing means practically is that if you have 1,000 here, if you have 1,000 here, and then you depreciate it monthly, as we have explained here, January. So meaning that in January, 83.33 will be what will be depreciated, right? Divided by 12. You see, this is what it will be depreciated. Now, if you now take it for a whole year, since your useful life is 1 year, it means that at the end of the 1 year, your total value will not be 1,000, meaning that you must have depreciated 1,000. The assets would have been completed when you do not have scrap value. Scrap value is when you say you don't want the asset to complete the decision. You want it to remain maybe some stock, maybe 20 naira or whatever, or one, depending on the policies, right? So it means that every month it's 3.33 will be depreciated, right? But is that the case we have? Is that what we have on our system? That is, do we have a case of 83 being depreciated every month? No, that's not the case. Meaning that this depreciation key we have used in the system is picking a percentage calculation. And that's why you are seeing 20, because we have used 2%, I think 2% for that depreciation key, which I've shown us before now. So let's take practical, let's create our own depreciation key. We'll create our own depreciation key. So, and I've explained what depreciation key, what base method means. I've explained what this thing means. We said base method. Let's just for repeating ourselves. We see base method uh defines how is a calculation method, right? Is a calculation method, and it defines how depreciation amount is calculated annually. And then we also confirm. Okay, now let's go to what they call period control method, right? So this one, in our own case, I will not be putting anything here. But even if you put 001, as you can see, nothing is being depreciated for even GL20. You can see 000. So they just assign a 00 declining balance method. But you may choose not to put anything here because you may choose not to put anything on declining balance method because declining balance method is another example of what do you call it? Of types of depreciation is another type of depreciation, which I also, if I have time, I will also show us how declining balance method works, right? So I will just quickly go to this period control. So what is period control? So period control, it defines how SAP determine the depreciation period. Now, what do I mean? The way I said it may be a repetition kind of. Let me explain. Like if when an asset is acquired or retired in the middle of the month, let's say for example, you acquire an asset in 15th of April, if or let me say January, you acquire an asset in 15th of January and you want to depreciate in that month. Should the depreciation start from first of that month you purchase the asset, or should it start from the middle of the month or the end of the month or the next month? And this is what this period control does. Read it, I'll repeat. Period control, what it does is that it determines it determines how depreciation should be uh should be depreciated. And I will explain again. If you acquire an asset in the middle of the month, how do you want the system to know whether the execution should start from the middle of the month or should start from the first of the month, meaning 1st of January? Or do you want the decision to start in 15th or 16th of January, or do you want it to start in the end of January, or you want it to start in the next month of January? So the period control, this is what it does. It determines how the depreciation will be calculated, right? It determines how depreciation logic will be calculated, like how depreciation will be calculated or the assets, how the asset rather, not let me say depreciation, how the asset will be depreciated, right? That's what this period control does, right? Now I'll go to the multi-level, which is this one. So what the multi-level does is that it allows you to define changes in depreciation over the asset life, right? It allows you to define changes in depreciation over the asset life. So what do I mean by this is that if you acquire an asset, let's say 1,000, you acquire an asset, say 1,000. Now, you want the first half, let's say we have 4 quarters in a year, you want the first quarter to take a depreciation of maybe 20%. That in the first quarter, you want it to take, or you want to depreciate the asset in 50%. You want the asset to be depreciated in 50% of the cost of the acquisition. And then subsequent quarter, maybe the second quarter, you want it to be 2%, or you want it to be 3%. So this is what Motilever would do. Motilever would define the period, the depreciation period over the asset's useful life. Example, you can, like I just said, you can decide that 20% depreciation to be for the first quarter, and then 10% for to be for the second quarter, and maybe another 10% for the third quarter, and another maybe 30% for the last quarter. So you can use this to determine how fast your asset should be depreciated over the year, right? That's what this multi-level does. So this is just explanation of what this thing does. Then we'll go into the system and show us in details what we meant by all these things, right? We'll just show us what this thing means in details. So let's quickly go into the system. Let's start with the base amount. We've shown to ourselves the what they call it, the decision key. This is how to create decision key. But we can't create decision key of our own if we have not defined, or we have not set up base method, or we have not set up period control and multi-level method. All these other ones I will also explain at the point when I'm creating the decision key. So let me go back. So I'm to go to the base method. I'm to go to the base method. And so the T code for the base method, I don't know the T code offer now, but let me go back. I'll use the parts. I'll use the parts. So I'll use the parts again. Then we are in calculation method. So I'll just open the calculation method, and then you see define base method. All right. Define base method is the first one, and I'll just click on execute. So let me see if I can get the T code for this. If I can't get it, then see. Okay, the code is not stated here. So you can use this transaction key to also bring you to this to the base method environment, right? It also bring you to the base environment. Now let's go inside. So we might not even define anything for base method. We might just use what has been defined before. Now, as you can see on our screen, we have different base method set up in the system already. We have 001, we have 002, we have we have 0011. So we'll be using 0011. Like we explained before now, that base method, we explained what base method does. We said base method is a calculation method, right? And we said it defines how depreciation amount is calculated, right? How the depreciation amount is calculated. Now look at this now. 0011. We are saying ordinary percentage from useful life. And you see explicit percentage. So let me double click on this and see for yourself. So this is the base method. We'll be using this particular one, 0011. We use 0011. And remember, we said the base method, what it does is a calculation method. It's a calculation. It defines how depreciation depreciation amount is calculated. Note that the depreciation amount is calculated, right? The depreciation amount is calculated over the fiscal year. So take this. Now, we see ordinary depreciation, we say percentage from useful life. We say types of depreciation, we say ordinary depreciation. And we said depreciation method, we said percentage from the useful life. So there are a lot of drop down here. So we want since we have said it's a calculation method, and it defines how the cost, how the cost is, what do you call it, is depreciated, right? How depreciation, how the amount, the cost, which is the cost now, how is calculated manually, annually rather, annually. So that's the simple thing you do on that screen. You just select this at default by system. SAP has defined this by default. So we just use this default setup that SAP already have. You understand? So we'll leave this, we'll use 11, and then we'll go back. Let's go back. We'll assume we have created one for the base method. You can only create one by yourself by selecting it, and then you select it and then choose a different key, right? You select it and copy. You select or you create a new one for yourself, right? So we'll not do anything since SAP has already given us multiple stuff already. You get, so we'll not really do much here on this stuff. So let's quickly go to other. Let's go to, so like I said, I will just explain this decline balance method. As you can see here, so the decline balance method, on that decision key that we use, the decision key that was there. Let me see if I can. Uh, let me show. Let me show us. To get to the decision key, the T code is alpha man. if I'm correct. Yeah. Okay, good. GL20, GL20. I'll select it again if I come to this place. So as you can see, like I said, the what they call the decline balance method that was assigned is 001, meaning nothing should be done. So I'll just show us the decline balance, which is 0000. You can see nothing is done actually. Nothing is done, right? And now, what does decline balance method does? So decline balance method, let me just explain what that thing is briefly. So is another type of what they call it is another type of depreciation. Is another type of depreciation. It declines. So what from the word declines each year, from the word decline, it means that depreciation amount declines each year. That is higher depreciation in early year, lower in later year. That's just the breakdown. Now see what has happened here. They are saying 2% should start first. You see, we said depreciation amount decline each year. Depreciation amount should decline each year. We don't usually use this decline balance method, right? But people use it in some other business. But we said the depreciation amount declines each year. So you can see 2% would decline first, and then subsequently it increased to 20%, right? You understand? Higher depreciation in early years. You understand? So this, and you can see the decline factor, which is 2%, the maximum factor. So if you want to use decline balance, you can always use any of these as well. But in our case, we are not using decline balance, so we are using straight line method. Actually, we are using straight line method. So let's quickly go to the let's go to the period control. Let's go to the period control. Let's go to the period control. So let's leave the decline balance method. The maximum amount, you can check it. You can check what this thing means. What this thing also means is that you define the maximum amount a system should, what do you call it? The system should depreciate over, you can see, maximum amount. Let's say here they said 1 million, 1 million. So you can see, so but I've not seen any business where I've used this maximum amount before. I've not seen. If you have any, you can drop some information in the comment section so we can look at it together. But I've not used it before. I've not used it before. So I'll just go back and then we'll go to define multi-level method. But before I do the multi-level method, I'll just look at the period control. Let's look at the nature. Or we can just talk about the multi-level. Let's go to the multi-level method. I have explained what multi-level does. I've explained what it does, but just because we are in the screen now, I'll just explain what it means again. We said it allows you to define the changes in the position over the period, right? You understand? We explained that, and we said, what do we say about it? We said, what multi-level does is that you can you can uh, you can say the depreciation should depreciate should have 20% depreciated in the first 3 years, and then probably take in the first quarter. You can say 20% should be depreciated in the first quarter and then subsequently. So I'll just use one of it to explain this multi-level to you. You can see this. You can see there's a 10%. I'll just select it and click on the level. So you can see this is how they set up the multi-level, right? This is how they set up the multi-level. You can see this is just a generic way of saying the acquisition here. You can just put, I know some of you are not have understood this. You just put 999 to depict the acquisition year, right? Now you can see what this thing is saying. What this thing is saying, the validity year, we say the first 4 year should take a base value. So let me explain what this base value as well is. I'll go inside. So here they've selected which base value, they selected 12. So what they meant by that 12, this is what was defined in the system. I'm just using it to explain. I explained what multi-level means, and we said what multi-level does is that it defines the changes in the position over the asset useful life, or over the asset life. Let me just say asset life. It allows you to define the changes in the position over the asset life, right? And then we also said you can choose to say the first quarter the asset should be depreciated for 20% and subsequently. I'm sure you get the explanation. So you can see they pick the base value to be 12, which what is 12? 12 is acquisition value reduced on planned depreciation, right? This is how they want it to be depicted because these are the setup. You say the first year, the acquisition year, just put 999 because you don't know what year will be the acquisition. Just put this as a generic nomenclature to depict your acquisition year. That's what this thing means. And you're saying in the first 4 year, the depreciation should take 10%. That's what you mean. You said in the first 4 year, the asset should be depreciated by 10%. That's what this thing is. And then you take base value. You said the base value you should look at the acquisition value that is reduced by the unplanned depreciation. And what is unplanned depreciation? Unplanned depreciation, I've explained. Unplanned depreciation is what is Let me really explain. You know, we have planned depreciation and we have unplanned depreciation. Unplanned depreciation uh is as a result of is when, for example, if you have an asset and it got maybe fire got caught the asset, maybe fire, or you have or you have a car, yeah, and the car have an accident, you want have an accident with the car. So you can see this is an unplanned thing, and now the asset has been somehow depreciated because of the accident that occurred to the asset, right? Or to the asset. So you can now do planned decision to reduce the what? To reduce the asset value. So that's what this acquisition value reduced by the unplanned depreciation. They selected 12, reduced by the unplanned depreciation. That's what they did here. They selected 12. And they now said in the seventh year of the asset, you can see in the seventh year of the asset, that is the seventh year of the asset should be depreciated by 5%. And in the 25th year of the asset, it should be depreciated by 2.5%. This is how you can structure your what? Your multi-level method. But in our own case, what we do in our own case is that we'll just use a simple multi-level method. We'll use a simple multi-level method. So let's look at one that we can do. I think we have this 00 already. Use what has been defined in the system already. We can just pick this one 001, because sometimes you don't really need to create anything for yourself. But if based on the business or based on the company you are doing stuff with, you require to do a new setup for the same, then you can have. But most of the time, SAP already have some default setup in the system. So we'll be using 001, we'll be adopting 001. And I'll just explain what it means. Let's say 001, then so you can see this is multi-level definition. You have to, I don't know if I'm to create if I should create anyone, but I don't really need to create anyone. But we can, like I said, you can just pick one of it. So 001 means it is 0.000 multi. We don't have what this 001 means, that we do not have anything multi-level. We do not have any structure of the asset should be depreciated. The first year should take 10%, the other year should take whatever, the other year should take whatever. We do not have that. But what I would do, I should create one. I'll just create one multi-level just for our sake. I'll just cancel. I'll go back with lever. So I'll select this and I'll just copy it. Then I'll just use, let me say JY. I'll just say JY01. Okay, it's not clicking it. JY. Let me show J. Let me just say J01. And then I'll say no multi-level structure. No multi-level structure. Structure. Right? I'll just do that. And then I could also say 0.000%, nothing, which is 0.0%. Then for this one, I would just say I want my own to start from the decision start date. So I'll just pick from ordinary depreciation start date, which is this. I'll pick this one, which is already there. Depreciation start date, that's two from the depreciation start date. I'll just use this. I'll use this. This is okay by me. And then I'll click enter on my keyboard. And it's telling me number of dependent just copied. I'll click enter on my keyboard again. And then I've created one, right? So what I would do now is to pick, I'll just pick this, I'll select this, and then I'll select the level. I'll select the level now. No, it's already entered, and this is already entered, but I'll change this one. I'll change this to, hold on, then, okay, I can leave. So I'll leave the period, meaning 12, because we only have 12 period. I'll leave the period. We have just the period is just 12, 1 January to December. I'll leave this period, but I'll change this. Okay, I can leave this base value to, I'll leave the base value to 24. So I'll leave the base value 24. What does 24 means? 24 is net book value. So that's what I'll pick. I'll just pick net book value. Then the percentage, like I said, we do not have anything percentage, so we can put 0.000 something. We can put 0.000 something, but it doesn't really matter. So I'll just do this. I'll click enter. Okay, 0.00. Okay, I may choose not to put anything zero. Zero. I choose not to put anything. Just yeah, percentage from the remainder equal, like I'll just check this. And I'll leave for all of this. I'll just click on save. I'll just click on save. save it. No, I think okay. I'll save it and I'll go back. I'll just go back. So we have GY. What do we define the level to? J01. If I'm correct. Let's go back and see. Okay, DZ J01. So we'll note that so that by the time we're creating our detection key, we assign our multi-level tools. I do not know if we really need to create the what they call it, the base method as well, so that it will be unique to our so it will be unique to our detection key. I don't know. We can create one. We can create one if you wish. So let's go back to that base method. Let's create one for ourselves. We said we'll be using 11 as so we can just click on copy and then we can choose maybe JY01 and then we'll leave every other thing. Leave every other thing. I'll just save it. Saving it already. I'll click enter. I'll click enter and then tell me save. So I will now go back. I'll go to the period control method. I've explained what period control means. But just to explain again, I said period control determines the precision partial period, meaning that if you define an asset and you said the acquisition value should you when do you want also what it means is that when do you want the asset to be depreciated? Like, do you want it to start from if you acquire the asset in the middle of the month, like 15th? If you acquire the asset 15th January, you want the asset to be depreciated to start depreciation from 15th January, or you want it to start from 1st of January. That's what this period control does. I've explained before and explaining it again. So again, so you can see SAP had already set up some system in the system. They already have some setup in the system, but I'll just use it to explain. I would not really need to create anyone for myself. And if we want to, we can just pick one of it and depending on what we want. So I'll just explain this. You can see this one is 001, 01, 01, 01, 01, 01, 02, 02. So what do they mean? You see this acquisition. So what this thing means is that whenever you want to depreciate an asset, you want whether you purchase it in 15th or 30th or 28th of January, the acquisition start date should be what? Should be 1st of January. That's what it's supposed to be. Should be the first. Let me go inside so that you understand what I'm saying. You see, pro rata at period start date, meaning that the period that you are depreciating, even if you purchase the asset in 15th of January, the start date of that month is when the depreciation should start from, irrespective. Even if you purchase the asset 15th of that month, if you start with 01, that's what this thing means, right? Now, for additional like acquisition in following year, if you do some additional if you acquire if let's say you are doing some additional cost, you are acquiring more item to the asset. For example, if you have a car and you turn the car to be an asset and then um the car now has a problem, the engine got bad and the engine cost is maybe around 500,000 naira. So if you are doing a replacement or you are buying the engine and adding or if you are buying the engine as a replacement to the asset, it means that you're acquiring additional what do you call it to the asset. So when that happens, when you're doing additional cost to the asset, how do you want the decision to start? Even if you acquire it in the middle of the month, you still want it to be 01, meaning from the start day of that month. That's what this thing is. Now, what this retirement, what it means is that if you are retiring an asset, if you are retiring an asset, so at what period do you want? So pro rata up to mid period at period start date. That's what this thing is. Pro rata up to mid period at period start date. So that's what if you're retiring an asset means. So same thing goes to transfer. If you transfer an asset, at what point do you want to transfer the asset and you want to depreciate it? How you want the asset depreciated? That's what all this means. Same goes to other ones. So I'll just use this to explain, not to take much of our time. So I can select and copy and name it. I can name this one, say JY01. Okay, I'll just say JY01. Say J01. So I'll click on enter and I'll save it. I'll continue. Let me joy. So I'll continue. I'll save it. So I'll go back. So now I can go ahead and create my decision key now. So I'll just go inside and create my decision key. Click on it. I'll click on it and then okay, I think I'm on it. I'll just go out and cancel. No. So I think I'm one of the decision key, which is this one. I'll close this one. I'm on the screen, that's why the error is coming up. I'll select it. So I don't know if it's okay. So, so I'll click inside, and then I'll create one for ourselves. So like I said earlier, so we can create new one. So let's just click new entry, right? Let's take new entry. So the depreciation key, I'll be using JY01. I'll use JY01, and then I'll just say, I'll call it straight line. Say straight line method, depreciation. Let me just say depreciation. So that's what we are using, right? So, and then the maximum amount, I said maximum amount. You remember when we were talking about maximum amounts, that if you want the system to pick a maximum amount for base one, then you select one. But in this our case, we'll not use base maximum amount. The cutoff value, what this cutoff value means is that if you don't want the what they call it, it was the asset rather, if you want the asset to have a cutoff value of maybe 10%, 2% or whatever, this is where you can pay that. That's what is cutoff value. But in this case, we'll not put anything cutoff value, right? Will not put anything cutoff value. And if you want to check the mark of number of depreciation with special depreciation, interest, if you don't have any, you can do this check. But you can read more on all of this. You understand? You can read more on this. And the decision to date, you can check it and you may choose not to check it. Let's just, if you want to know more of it, you right click and you click on help. Then you see the decision calculation to exactly what it means. What you can read more on this. So what this thing is saying, any period control methods entered in this decision tree are ignored for entire useful life of the asset. You see, so but that's not what we want. So we just uncheck it, uncheck it. Acquisition only allowing cancellation year. So what this thing is saying that do you want application only allowed capitalization here? No, that's not what we want. So we'll click on no, and then we move. I'll click enter, then I'll go to assignment of calculation. I'll go into assignments. So good. Now we are here, and then I'll select. Sorry, let me go back one bit. So yeah, what this thing means is that you want us the system is engine. Sorry, just so I can save this and then come back to. There's no phase one yet to define PJY. Okay. So what this thing means is that it wants us to put some of the assignments, but let's go ahead first and then let's come back to it. Let's click on this. So what this thing hope is not grayed out. Okay, click on new entry. Sorry, it's my error. Go back. Let me just go. We're checking we lost. Yes. So I'll go back. So now the system is grayed out. I'm not saying that it was grayed out before now. So it's grayed out. What you just need to do is to click on new entry. You click on new entry and then you start putting all the necessary thing. Now, depreciation type, what type of depreciation, what type of, what do you call it, you want it? So, depreciation type should be what? Ordinary depreciation, right? It's not special tax depreciation. If your depreciation fee should be special tax, then you click special tax. But in this case, it is ordinary depreciation. So I'll select this one. Then what phase? So I'll just say from the start of depreciation, all right? That's what the phase is like. You take from the start of depreciation. That's what I'm selecting here. Now, the base method we created with JY. If it is JY, okay, good. We've created JY01. And then we say we are not using it on the flying balance method. And then we come to period control. I think it's JY as well. Don't know. Period control, we use 001. Okay, we did not create anything for period control. We just use this. We would have created one. I think we created one. This one, J01. Good. Now for the multi-level as well, we just select. I think we did J1 or J0. Okay, this is it, which is this. We select it. Now the class, we'll say, let's just say straight line depreciation, because that's what we are doing straight line, not straight line balance. We are doing straight line. Okay. So change method. For the change method, we just say no automatic change. We just select this zero. It is no automatic changeover. Then for the changeover rate, because we don't want anything, we can just put 0%. Just say 0.0. Okay, it's not taking it. Okay, I just put it. Just leave it. And then let's come to multiple shifts. For the multiple shifts, we can just leave this. We can just leave this increase in the position and expired useful life. Let's just leave this one. For scrap value, like we said, we are not using anything for scrap value, so we can just No cutover should be ignored, because we are not using it, right? No, we didn't use it upward. So shutdown, we can just use shutdown to be yes. The moment you are done with the assets at the position, let it shut down. Yeah. I don't want to use it again. So let's leave it as yes. Let's leave it as yes. And so we are done with the setup here. We are done with the setup. Now the other thing that we need to do, I'll save it. The other thing we need to do is to make it active. We need to make the asset to be what to be active. That's the only thing that is expected of us to do. We need to make it active. Remember when we went to the show key, you say inactive. Can you see that it's showing that it is inactive? So you can see it is inactive. So the next thing we need to do is to make it active, right? So as it is now, you can just click on activate, or then let me show you other method if thought you can see it. So you can see the activate has gone up. You need to go back to this place and then you see the activate, right? So you just need to click on activate. So KJL was activate successfully inside of it. You can see it has changed to what to activate. So you save it, and then you click on continue, and then you are fine. So now let's go back, and I think we are fine now. Let's go back. So remember when we assigned the decision key here, we are going back to the master record. We assigned the decision key GL20, right? So let's create another asset code. Let's just control N and use AS01 to create, and then we say the asset class is this, if I'm correct. Click enter, and then we say we can say 22 or man or let's see generator. Let's say generator for generator frame one. Let's just say that, and then you can copy the text, you put it on the next one, and then you can put quantity. If you have inventory number for that asset, you can put it here. You can put the quantity of the asset you are purchasing, whether 2 or 3. You can put that. You can click on manage historically. You can come to what do you call it? If you have a cost center, you can include the cost center. Because we have not created the cost center, so we'll not put one in there. So we'll go to you can come to assignment. There are a lot of things here actually. If it is for investment purposes, you can put evaluation group. But that's not the case. If you have a vendor you want to purchase the asset from, you can also indicate their vendor number here, whatever. You can put everything. This is an asset master record. And you can put a lot of information on this place. So we'll just quickly go to the position area, and then we change this one because we have not changed. So now remember when we created an asset class, we indicated the position area there. I will show you that, but you can still change it here. So I've changed the position key now. I'll just say 1 year. I'll click enter. Remember again, under ordinary position starting, nothing is here. Nothing is there. So I'll just save it. I've saved this now, which is 100. So I need to go and acquire the asset for this now. So let me just quickly click on S-90, which is to acquire an asset. I just want to show us. I'll use 010124 as well. Then 010124. Sorry, 24. This is 01. And then I'll put that. I'll put the vendor. The vendor, I'll use the same vendor. Go inside, enter. I'll use the same 1000 so that it's easy for us to understand. And I'll put the text. Just say generator purchase. So I'll use 70 as usual for the asset. Now the asset is 0 has changed to 1 because as you are increasing the asset, the number will be changing as well. So I'll put transaction type 0 this, which is external acquisition. I'll click enter. Then I'll put asterisk here to call the amount in the previous line item. I'll put plus here to call the text in the previous item. Then I'll just go to document and then simulate. This can say I've simulated and then I'll just post. Okay, now I've posted. Now the assets must have some value. I just go to the asset value. Is this the asset I'm using? No, what is this? Is not the asset. So I'll go back. Okay, let me go back. So I think okay, let me just use this screen to go to the assets. Now, if you want to view the asset before I go to the asset, so you can check display to see the entries. Okay, there's an error here. Okay, I'll come back to the zero. So let's check AS02 to see the asset. The one we just created is 1. I'll click enter on my keyboard, generator tree 1. Then I'll click on asset value here. Remember, Remember, we so this is the asset value. You can see 1,000. So because we are currently we are in at the time we are doing this video, this is April 2025. And so the system is assumed, and we are creating today is April. We're in April 2025. But the posting date we use is what 01/01/2024. If you look at the video, you see that 01/01/2024. And you also see the asset value date is what 01/01/2024, right? Let me go back to the asset minister record so that we see. Now click on this depreciation area. This thing. You can see the ordinary depreciation has fetched the date from the posting date. So I think I will explain this part as well. So come back to this place again. Now you see the ordinary depreciation is already showing negative of 1,000. It's assuming that you by this time, at the start of this time, you have finally depreciated the asset because the asset is just 1 year and we're in 2024 and we use the date of 01/01/2024 and we are in 2025. So it is assumed that so we'll just look at the posted value and then you see that the assets as far as you can see the planned depreciation up to 12 should be up to 12 is what you can see it's 3.343435 and finally finalized the depreciation. So remember we showed us something on the Excel sheet when we're telling us that if you take this 833, we are expecting that this is what at evenly without scrap value, at evenly as without scrap value, this is what we should get 1,000. Can you see that? And by this time, we expect that the asset must have complete the depreciation. That's what this thing is. But if you look at the previous asset we created, which is for what do you call it? For zero, which is zero, zero. Let me see what is zero. Okay, so for zero, let's see, plan value. You can see it's showing us 20. Reason being that, but if you check the other one, let me see if I can just share the screen. Let me just see. I'll share the two screen. I'll say AS02 and then the last one, one. So it's being processed. Is zero zero. Let me just check it. Sorry, taking a long time. It's for zero. Okay, and that is for 01. This. So this one is zero. Let me close this one first. This is this one. And then can you come to this page? This one is for one. So let me do something. Okay. Okay, good. Now, as you can see from my screen here now, you note that this one is for one and this one is for zero. This is the asset we created 3-1 facility and this one is generator 3-1. Now, because we have assigned the correct depreciation key to this one, you can see it's telling us that by this time, this asset will be fully depreciated. That's why you're seeing negative of 1,000 here, right? And for this one, it's saying that 20 because why? The depreciation key that was assigned to this place is taking 2%. You understand? So this is how these things works, right? This is how this thing works. So if you go to posted value, you see the item that would have typically say 8383. But if you check for this one, posted value, you notice that what was calculated is different, which is 167. Just what we have shown you on Excel. You can also walk around your Excel sheet and see. Now let's go back to the master data and just show you the depreciation key once again. You see, go enter. So you can see this JY0 and fuller is one. We'll do the same thing for this one too. And then we go to the depreciation area. You see this is GL20. This is 1 year as well with the same starting date. So this is how to do depreciation. Maybe in the next video we'll be doing depreciation. We'll see how we can depreciate this asset. Thank you very much for this wonderful attention. Thank you.